Hello, Oakbloke here, and this is going to be Jubilee Metals Take Two. So, it's my 13th idea, and guess what? I had some bad luck. uh, I uh, I spotted it, and then one of my viewers spotted it. So I took down the original video, but my estimate here for profit. Basically, this I think was a plus and not a minus, and the profit was completely wrong. So I'm re-recording this video with correct information. I wouldn't want anyone to be inadvertently misled. But yes, slightly ironic that the 13th idea should run into bad luck. Um, this is Jubilee Metals. It's going to be talking about Jubilee Metals, and let's kind of zoom in on this a little bit so we make it nice and big for you. So yeah, so JLP, I Need Somebody, JLP, not just anybody. Can't think what song that is, but maybe you've got some ideas. And yeah, exits and opportunities, and the unlucky 13th idea for the Oak Bloke picks for 26. So yeah, so there's a load of people, load of institutional investors leaving this share, and I list them here. You know, so some have half exited, some have completely exited. I think they're selling down. Then others are joining. So hence the sort of exits and entries, and the buy and the buy. You know, to my mind, it's absolutely the wrong time to be selling this. It seems crackpot to me to be selling, but that's for me to kind of justify. So I'll kind of talk about that in this video. Obviously, some of the reason that you might have held this was because of its PGM's business, which they've now, well, they pretty much have sold. I mean, it's there's a couple of regulatory steps still to go, but they've received initial funds. They've done everything other than get clearance from the authorities. But the three key results that they shared did illustrate the problem with that business that they've sold and been able to sell, in my opinion, at a very good price. Is the fact that they disclosed that there's a cancellation from a customer, and all of a sudden there's a 500,000 tons of production that is suddenly not there. And that's exactly the problem, that this was a processing. This was a processing business. It wasn't a. They didn't own assets other than the machinery. They processed the ore from. They were buying in ore. They had to negotiate those terms in a world where PGM ore is much more valuable than it was a few years ago. The price that you're paying to buy it is higher. So lots of reasons to dislike it. I mean, when the price of PGMs go up, Jubilee are not the ones that are going to be enjoying the bigger profits. It's going to be the people selling the ore that get the bigger profits, because all of a sudden the unprocessed ore is worth more. And I think the other thing that just over time happened, and I don't know this for a fact, but I mean it's common sense, is that of course people would have left Jubilee and gone and worked at XYZ Limited, and XYZ Limited would go, oh, well, what did Jubilee do to extract? Oh, they used to do it this way, and they did this and they did that. And you can imagine over the years the techniques and the know-how, because it is know-how. I mean, Jubilee don't have any IP as such. I mean, they've got years and years of experience. They've got some clever people, and they've obviously done some novel approaches. But those novel approaches were not novel in the long run. So I think to get 90 million for that business is a very good outcome. And the so that has happened anyway, and fundamentally, if you are of the mind that, well, because they've sold their PGM business, I'm going to sell Jubilee, then fair enough. I mean, go and buy a PGM business elsewhere. There's a great one called Teresa that is one of my 25 ideas. I'm just kidding. But yeah, I guess, you know, to my mind, the bit that I think justifies the rationale of this was that they just didn't own the assets. Meanwhile, in Zambia, they do. own the assets, and they own some tremendous assets. We'll be talking about those. And the other thing to say is that whilst, yes, PGMs have gone up in price, it's also the case that copper has gone up in price during 2025. So, and if, in fact, if we look at the price of copper since 2022, it's been going up since 2022, and it's been going up during years when there's been a surplus in the market of copper. The price has been going up, whereas this year, we've now reached, I think we're going to see an outturn in 2025 where there's a deficit in copper. And there's a couple of reasons. I say there's a number of mines that have suffered catastrophes, copper mines. And so whilst the official forecast was for a surplus of 178 kilotons of copper, things like places like Grasberg caved in quite literally, millions of tons of in a landslide that unfortunately killed a number of people, and Grasberg isn't the only one. I mean, there's riots going on as I speak in Peru, and there's quite a number of copper mines in Peru, and deaths in China where again, just tragedy struck. So there's quite a my best estimate is that we're going to see a 300,000 shortfall in 2025 is the likely outcome. And I think when copper has been going up in price, when there's been a surplus, all the more reason to think there'll be an even bigger rise in price when there's a shortfall. Visible stocks are at multi-year lows. We've had all of the fun and games with the US, and yes, there has been a downturn in China in terms of building, but I'd say some of that has now started to come off, and the Indians are actively involved in build out of energy and build out of things that use copper, as are the Indonesians, and that's just two of the large economies in South Asia, Southeast Asia, and there's others. And when you look at just even populations, I mean, you've got population growth in. Go and look at the population growth of Vietnam. I mean, they're growing by about 1 million a year. Thailand, I think, is about the same. Malaysia, maybe not as much because it's a smaller country. But Southeast Asia, look at the population growth. And when you've got 1 million more people, that's 1 million more people that are going to want electricity, kettles, cars, consumer goods, that use copper. It's as simple as that. And the world we're also living in is where nearly 50% of vehicles in the UK are electric vehicles, and there's some really excellent electric vehicles, and even just hybrids. I mean, the plug-in hybrid I had recently was superb, and it would do, I don't know, 70 miles on a battery, and then it had a petrol engine on top, and it would turn into sort of a normal hybrid engine. So the build out of copper, I mean, it's without dispute occurring. So demand of copper, again, the official number is 3% in 2025. Is the forecast, and that it will be at 27.9 million tons of demand, led by China, but also, as I say, electric vehicles, grids, renewables. There's a lot of work being done on grids. That obviously with the build out of renewable energy, and renewable energy uses copper. That the grids are also having to being built out to support that change. So lots and lots of reasons to feel quite bullish about copper. I thought this was a very good statistic. $250 billion will need to be spent, still need to be spent, say Citi and Bank of America, just to maintain current levels of production. So that's before any increase of demand. That's just to keep the status quo, to keep the lights on via a copper wire. Anyway, so that's our increase of copper even during years of surplus. It's at 11,000 today. Smart money is leaving. So these are sort of institutional investors that are selling down Jubilee, but then there are others that are buying Jubilee. So it's a mixed picture. Some entering, some leaving. But the ones that are leaving, I mean, they bought in at much higher prices. I mean, nobody is selling out at a profit, they're selling out at a loss. And that will be down to, I think the sale of the PGM business could be one motivation, and maybe just a lack of faith or something like that. But I think you've just got to look at this and say, well, okay, obviously when smart money leaves, you've got to take notice of that. But then when you see, well, there's also smart money arriving, it's a mixed picture. I would certainly take encouragement from their achievement in Q1 2026, which was the 3 months to the end of September. So, up to end of last month, that they actually did achieve, 915 tons production, and that it's this isn't just something that's happening in theory and on paper; it's happening in practice. Uh, at the time of at the time of first recording this, I mean, obviously there's been a move in the price today, on Monday the 27th, but at the time of writing this and recording it last Friday, which was 2.55 to 2.7, was kind of where the market was then. That and looking at their forecast and guidance of 5,100 for this year, that still looks to be on track and achievable. So essentially, the business at this price is valued at 108 million. Okay, and the 157 million that we see here is basically the transfer of debt for the sale of the South African business, plus the revenue, the sale, the 90 million, of which 87 is certain, and then 3 is contingent. So it's based on targets and profit share and royalties, and so 87 is certain and 3 is uncertain. But equally, I mean, with PGMs at record, well, not record, but it's PGMs at buoyant prices, there's every reason to think that that 3 million will happen. It's not as though it's some sort of impossible bar. So anyway, that's kind of a positive. And when you work through the numbers, you get to a book value. When you strip out the cash in the business, the net cash in the business, you get to a 65% discount to NAV, where the NAV itself is, the book value kind of doesn't really account for the cost and the price of those assets. For example, they acquired the Sable refinery for a very, very cheap price. If you actually went and built another Sable refinery, it would cost you many times more than what it's on the books for in the balance sheet. I forget the exact number that's in the balance sheet, but it's, I think, maybe something like 50 million, maybe less, 45 million. And the replacement cost to build another one would be somewhere in the range of 300 to 400 million. So when we say that there's a discount, I mean, the discount is actually, I would say, more substantial than the initial numbers sort of suggests. Anyway, part of what they keep as well is the Tjate, which is in South Africa. So the stuff that they've sold is this stuff over here, which is processing plants essentially. Over here, there's an undeveloped reserve. Tjate is in the books at 41 million. It contains an estimated 65 million ounces. So potentially one of the largest undeveloped blocks, 5,140 acres, never been tapped, never been drilled out. Quite how they arrive at this estimate, therefore, whether it's just a read across of similar geologies or something like this, I don't. But and of course, there needs to be a proof to the for this to actually be monetizable, should we say. But at the same time, I mean, with PGMs being what they are, and you look at the longer term picture for PGMs, again, there's every reason to think this will at some point be worth something, even if it's the case that Jubilee have to throw some money at it to drill it out or to develop it to some extent, to prove its value to a prospective buyer, or to develop it themselves. Who knows? I mean, there's both options on the table, I guess. They must have had a plan for it when they acquired it, so and I suppose I make the point that even with a basket price of 1,700 now, a basket price of 1,700 is, I would say, quite a bit below what a typical basket would look like. If you look at a basket for Teresa, it's more like close to 1,900 now, if not 2,000. So 1,700 is, it's the rhodium that rhodium's now at 8,000. So if it's 10% rhodium, you're gonna, that's gonna contribute kind of, that's going to tip it to above 2,000. If it's less rhodium, if it's 5% or no percent rhodium, then that 1,700 could be about right. But then there's other things as well. I mean, iridium and there's six PGM metals, and gold is one of them as well. That gold, of course, at 4,000 still. Unless that's changed in the last few minutes, which looking at my 4,005, so it's still clinging on above the 4,000 mark. So let's see what happens there. The jury's out. But yeah, gold is very often found alongside PGMs or as part of the PGM six. One of those six is gold. Okay, so gain on disposal, they're selling essentially the net assets are 75 million, so they're selling at 90, so they're actually selling it above book value. They're going to be making an accounting profit for the next 3 years, so I would expect to see 4.9 million profit in the next 3 years of accounts based upon the sale. So there's 5 million of profit, or 4 million pounds, even before any operational profit. I mean, that alone is not in the price. Now, obviously, that is a paper profit in the sense that it's assets that are being sold or monetized at the $90 million. But obviously, those $90 million, that's cash that's going to be coming into the business. So again, the fact that there's going to be a large wad of cash, and what could you do with 90 million of cash? Well, in a place like Zambia, where you already own project Mufele, and you already own the large waste project with 250 million tons of waste, where you already own a copper refinery, where you already own a copper concentrate processing plant. I mean, they already own a lot of assets, so an extra 90 million will unlock a great many things, in my opinion. Anyway, we'll come on to that. Jubilee talk about 3 pillars to their strategy. Now they have, we've been here before. We had North and South, and then we had Project Elephant and Project something or other, Project Unicorn, I can't remember, but I remember Elephant sticks in my mind. I think Elephant eventually became Sable, or eventually Elephant became North, Project North, and North became Sable, and now Sable has become Pillar 1. I think it is. So the idea with these 3 pillars is I suppose just kind of strategizing and making it, I suppose, simpler for investors. So it's to be welcomed. I'm being a little bit cynical by saying, oh well, it's been called many things. It has, but pillar 1, 2, and 3, fine. Let's go with that. Now, the Zambia business did make a profit. It made a profit in FY24 of 5 million. It made in 2023, it made a 0.2 million profit. In the last period, the 1H25, which was the period up till last Christmas, last December, it lost 1 million, made a 1 million loss, but that included 2.7 million of other costs, group costs, and that was also through a period of time when essentially the power cuts, and the before that it was the water. So they've kind of been through the mill, so to speak, not the water mill. or the the wind turbine mill. But yeah, they've kind of had all manner of bad luck, So it's not without coincidence that this is the 13th share and the 13th idea from the picks for the 26, picks for 26 from the Oak Bloke, and but they've dealt with these things. I mean, they've got alternative power providers. They've managed to source alternative sources of water. So they've kind of overcome these challenges. The 1H25 results weren't great, but like you'd be mad to think they would have been. I think the 2H25, so the results up to this last June, 4 months ago, I don't think those are going to be particularly good either. So I'm not choosing this because of, like I'm thinking, oh yeah, they're going to sort of pull a rabbit from the hat and go, hey, look at us, we've made all this profit in 2025. I mean, it could be that they will have made a profit because of the platinum business. Do you see what I mean? Like that side of the business, even though they've in the third quarter they've obviously had a setback, and it's the new owner's problem now, isn't it? But obviously the profits that they make until they conclude the sale of the business will continue to come to Jubilee shareholders, of course. So there is further profit, and it's always been profitable. It's just the value of the share, or the market capitalization of the share, relative to the profits it was making. It was always sort of a disappointing ratio, that it was, I think, price earnings of 20 times, 30 times, something like that. And and that's always been the challenge here: is can it actually grow its profits? Can it actually start to give shareholders a return? I mean, where are the buybacks? If you've got 90 million of cash, and this is one of the things that's quite interesting, is if you've got 90 million of cash, and I'm not saying not all 90 million of it, but like if you can start to buy back your own shares, and you're buying them back at 2.5 pence or 2.7 pence, that's and obviously at a 65% discount to NAV, that is incredibly good for shareholders, incredibly good. And obviously you've got the ongoing cash generation and profit generation of the business as well. And I suppose one of the things that I'm going to sort of come on to is let's kind of start looking at these pillars and the actual operations. So pillar one isn't Sable, pillar one is Rowan. So there we go. I better learn my pillars. Pillar one, Rowan. So this is basically where they're taking like variety of wastes. This is kind of like Odd Job Harry of the copper production world. And Odd Job Harry will take, all manner of oxides and sulfides and process them. It might be a little bit here and a little bit there. Basically, it's flexible. It can kind of deal with all manner of wastes and tailings and run of mine. So these guys managed to basically process material that was on average 1.65%. They managed to pull 915 tons from it. If you actually do the maths, 1,000 tons per day, 1,000 tons per day, 91 days in a quarter, 1.65. I mean, that's 1,500 tons of theoretical production. If you've got 100% of that 1.65 copper, you would have 1,500 tons of copper. Well, they didn't have 1,500 tons of copper. They had 915. So they're getting about 60% of the copper. They're losing about 40% of it. One of the ideas and one of the things that they're now working on is to capture, to basically build out a leach circuit to capture nearly 60%, they describe it as. Well, nearly 60% of 585 is around, or it's above actually, but let's say it's 300 tons of upside per quarter. So essentially this little copper leach circuit would increase production by a third. That's the first thing that I would point out. Second thing is 1,000 tons a day is 30,000 tons a month. And anybody that knows their top trumps of these pillars will know that Rowan is not a 30,000 capacity, it's a 50,000 capacity. It says that there in that little picture, 50 KTPM. So it's running at about 60% of its capacity. There's a lot of 60% here, isn't there? But anyway, it's running about, 60% of its capacity. So if it actually can up its game to 50, as its nameplate says, then that would be a production upside of 2/3, which, if we're talking 900 tons a quarter, so, well, say 300 tons a month, plus the 300, so that'd be 100 tons a month. So that's 400 tons. Yeah, 400 tons. If you can up that by 66%, I mean, that's 666 tons. So that's kind of getting you to eight kilotons. Now, here they say about the capacity of 13,000, so that's higher still, because then that's, I suppose, also sort of using the sulfide circuit as well as this modular circuit. But the point is that 300 a month is 300 a month is terms of capacity. I mean, it can go higher. It can go higher. Pillar 2, Sable. Sable is the refinery they're building out, so they're building a second second tank house, and that will double capacity. So capacity will be at 14,000, which is clarified to be 11.5 of cathode with 2.5 of sulfide. So sulfide would be copper concentrate, cathode is solid copper. It's the sort of like, I suppose, if you had a copper bar, that's cathode. That's whereas concentrate is obviously concentrate. It's a liquid. It's a sulfuric concentrate. So that's the sulfide. And don't ask me more about chemistry, because that's probably not at my limit. But that's kind of how it works. And pre-extension, so pre-expansion, they could or should have been able to produce 600 a month. They didn't produce anything like that. Highest number was about 400 a month, and that's sort of because of the variability of the inputs. So what the plan is, and it's, I think, quite a good plan, quite a good strategy, is that they're going to do pre-processing. So whilst Rowan, pillar 1, is, jack of all trades, Harry, the jack of all trades, I can deal with this, I can deal with that. Sable and pillar 2 is the exact opposite. Basically, I want to have everything kind of standardized. I want it all pre-processed so that I can knock this stuff out at maximum velocity. And that's kind of a completely different and other approach that they're taking with pillar 2. So the pre-processing will deal with all of their variability, let's say, and that's what these modules are designed to do, deal with the variability, so that what gets chucked into Sable is basically, it's already at between 3 and 5% concentration. I think it's actually going to be 5% concentrate, and then obviously cathode is to turn it into 100% constant, or near enough 100. Whereas the sulfide would be to turn it from 5 to 25, and then you sell it as a 25% concentrate. So that is the plan, and that's kind of a picture there of the tank house, and essentially it's the copper gets deposited on those plates, and that's how they create the cathodes. So the idea here is that there's various feeds coming into Sable. So historically, it's been Rowan that's fed Sable. So the plan is that jack of all trades Harry is going to be over in one part of Zambia doing its thing, whereas Sable's in the other part of Zambia and it's going to be doing its thing. They're not going to be sort of collaborating in the future. They're actually going to sort of separate out and do their own thing. So they're different pillars, where before they've perhaps been the same pillar. So it's quite a different strategy, but a good strategy, I feel, because they can kind of, jack of all trades does his thing, specialist does its thing, and you maximize the throughput. It makes sense. So they've got Munkoyo, that's now been, for whatever reason, no one knows the reason, it's been renamed Molefe, maybe it was always called Molefe and Munkoyo was a code word, and they've now sort of said, oh well, let's drop the code word and we'll call it what it actually is, which is Molefe. Don't know. Who cares anyway? It's so Molefe mine is a real doozy of a mine. It's got 3.5% concentrate to start with. So this pre-processing hasn't got much work to do. It's only got to get it from 3 to 5. It's got an easy job. And actually they are pulling some ore out of the ground that's high grade that they're sending straight to Sable anyway. So Sable's sort of only doing a little token amount at the moment, 3,500 tons a month. They're going to ramp that from 3.5 to 8.5 by January to March. And so it's growing slowly, but the idea is that the high grade stuff is being sent, the low grade stuff is being stockpiled. So they're building a copper module that will deal with the low grade stuff, and they reckon that they'll have that by June. That will be sending a high grade stuff to Sable, so that'll add another 120 a month. And then the idea after that is that they add more copper modules to get to fill Sable essentially. So there's 2 million tons stockpiled. There'll be more by the time this is built, and it's as I say, it's about creating a consistent feed for the Sable refinery. So this is where I map it out into, well, what does that mean in pounds and pence and dollars and cents? Well, what I'm doing here, like this is Sable, so this is the run of mine. So this is actually how much copper we see from that. So it's the 3.5 moving up to the 8.5, turned in, sort of at the 3.5% turned into tons of copper. We then see the copper modules, and we see the first one comes on board in July to September. The second one, I'm assuming, comes on board 3 months later. The third one, if there is a third one, and this might be something other than comes on 3 months later. So what we see is, that in the year of 2027, we see 9,000 tons of production, 9 kilotons of production in the coming year, 6.1. So I'm assuming 6.1 rather than 5.1. And that's kind of, to my mind, I mean, this 900 is pretty nailed on. As I say, there's 66% of spare capacity, the 20 kilotons per month spare capacity. I've just put a load of question marks, so that's an upside. And then this copper fines, I mean, on the basis that that's arriving into the into it in 2026 by January, that adds a further 600. So we sort of see, and because Sable is still processing, I mean, this is the thing that they tell us in the RNS that they are still processing at Sable, but at a reduced rate. So even though they're doing expansion, they're still producing. So actually, when you run the numbers, you kind of get a brighter picture than they're actually forecasting if they can achieve these numbers. I'm not saying these numbers are absolutely nailed on, but all this is sort of extrapolating out what they say they are doing. I'm not doing anything other than sort of turning those into what the implications of what they're saying is. So even when we get to this 9,000, that's still only sort of 37.5% of the capacity. And obviously they can get above. Well, you would expect them to get above that. That's not an upper limit of any kind. Otherwise, what's the point of doing the expansion if you're not going to get above? This alone, so Sable, this 1135, I mean, okay, if you take those, I mean, that's 4,000 tons coming out of Sable. They've just upgraded it to do 14, not 4. Like I'm saying 4. So in other words, this is not sort of anything other than like a baseline of what I expect Jubilee to be able to achieve. Like they might achieve more. In fact, I expect and I hope that they achieve more, because what's the point of spending all this delay of time, 18 months it's taken them to expand Sable? What's the point of expanding it? You already had a tank house. Yeah, it's there. There's the photo of it. You had one tank house, you now have 2. That's the expansion you've done. You've done that expansion because you need to do more of these dipping copper plates, cathodes. Yeah. So they're doing it for a reason. So I don't see this 4,000 tons as some sort of like, this is what it's going to be in 2028. 2028, I would expect these numbers to be higher. And during 2027, and when I say 2027, FY27 starts in 8 months' time, 8 months and 4 days. Yeah, because today's the 27th of October, 1st of July, 2026 is the start of FY27. So this point here, and during these 6 months here, so this is kind of like this line here is when the Oak Bloke picks for 26 ends, is sort of the end of the race, so to speak. At this point here, we'll have a much clearer idea on the trajectory of the whole thing. So this is kind of where I'm coming from with it, that some of this might slip, some of it might also outperform relative to kind of what they're saying is in the plan. So anyway, with that in the plan, and bearing in mind, that I've said a couple of times that there's potential for upside, that let's look at the financials now. The past margin was 38.3. I've not assumed 38.3. I've gone for a more conservative level. So I mean, 5,100 per ton as the cost. The actual, if you go back and look at FY24, the actual was about 4,900 and something, 4,920 maybe. It was below 5,100. So again, this cost, I don't see this as sort of an immutable, it's going to have to be this much. It might not be. In fact, it probably won't be. Again, I'd expect this to outperform potentially. But yeah, this was the bit where I got very unlucky, and basically a little glitch in my calculation meant that it was adding and not subtracting. But yeah, we're looking at a 36 million a bit, and that's based upon 1,800 is 3,600, and Sable 4,200. Now, if you go and look at, I'm just looking at another writer over here, Mr. Archer, who wrote about Jubilee. He talks about Rowan at 4,500, so that would be about 25% higher than my estimate, my forecast. He's more bullish than me, but that's fine. I mean, in fact, I thought I'd take the opportunity to just let's kind of plug Mr. Archer's numbers in, just to sort of let's look at what happens to the profit. So that's what happens when we get that, and today's copper price is that. So you can see the EBIT has already moved quite a bit. Profits are up by about a third, and we haven't finished, because he also says, combined with the Sable, the company expects to achieve. Now, I mean, Mr. Archer talks to Jubilee as well. I mean, I don't talk to Jubilee. Expects to achieve 8,000 to 10,000 tons. Well, okay, well, that's sort of 8,600. So 8,000, 10,000. I mean, okay, we're probably about there with what Mr. Archer is saying in terms of his forecast. But, that a bit, whether it's 36 or 42, yeah, you kind of get an idea that it's going to be into the sort of tens of millions. So there's and that 36 gets me to a PE of 8 times. Okay, so that PE of 8 times is essentially where I'm taking that a bit. Other costs get me to a 9.6 million net profit, or $12.7 million. And that's kind of the calculation that I've done. So again, the depreciation, the operating expense, how much of this is going to sort of get stripped away because of the sale of South Africa? It might be that this is, again, quite conservative, that there's more fat to be cut out of the equation, and therefore this number could well be higher. I'd also point out that copper may go higher. The cost of production may go lower than 5.1. In fact, it probably would or could. 62% in my model, I'm only producing 37.5 of nameplates. Well, what happens if you actually produce more than that? Well, you saw just now, using those different numbers, the profit leaps 20-25%. What about the third pillar? Now, my model we've only talked about two pillars. There's three. So we've got the large waste project, we've got Mufalira. So there's other things as well that will add to the profit, and whether that's through the sale of assets or through additional production is obviously a question. None of this model includes Tjate, but also, I mean, you've got to consider that there's going to be. I mean, they say that they need 5.5 to finish Sable. Fair enough. Well, that still leaves 84.5. So there's 84.5 that can be used to buybacks, further investment, different things. Yeah. So there's, I think, the thing that I like about this is that everything that needs to happen, pretty much, I mean, everything, most or if not all of what needs to happen is already in the price, apart from arguably this 5.5 million here. That's, oh yeah, we need another 5.5 million to finish Sable. Fair enough. But everything else is built. It just needs to be executed. They just need to go through with it and actually achieve it. And we're already seeing that in the first quarter results, that they've managed to produce 305 tons per month. So they're already executing. I mean, that 1,800 that I'm assuming is 300 a month. So they're already overperforming relative to my own model, which is encouraging. So anyway, if you look at it from a balance sheet point of view, obviously I'm sort of talked about it from a profit and loss point of view. If you look at it from a balance sheet point of view, again, there is quite a large margin of safety. So that's what the 2020 first half interim report, 2020 first half 2025 report balance sheet looked like. So the whole business, and this is sort of both South Africa and Zambia, contained 257 of assets, 169 of current assets, so long-term assets, current assets, 426 million total assets. Shareholders' equity is 243 million. So bear in mind that you can buy this share for 108 million and you're getting 243 million. That's where I'm getting the 65% discount to NAV from, is that's the value of the assets, or sorry, the value of the assets above the liabilities. Anyway, this brown column splits into these green and salmon colored columns. So, this equals this plus this, essentially. Yeah. So this is what's being sold. Okay. This is what's it's sold for. Okay. So essentially, this survives, add that and that to become this. Okay, so 223 plus 90 is 313. Yeah, that plus that equals that. And then what I've done here is just basically simplify the whole thing down to take out all the, in other words, I've got this wodge of cash. Great. Okay. And that 65 million there is like receivables. It's not necessarily all going to be cash on day one that they're going to pay the bill over 3 years. But essentially, I've got like a load of assets and I've got a load of long-term liabilities. So just to kind of see more clearly what it all looks like is, once you strip out all the liabilities, so this is the bank debt, it's the deferred tax, all sorts of liabilities, that and so on, that you end up with a business where you've got 35 million of working capital, 206 million of assets, long-term assets. So what I've done here is take the market cap, strip out the current assets, the working capital, because theoretically, when all's said and done, that's cash. You could use that to buy back shares or whatever. So what you're left with is that really you're paying 73 million once you strip out the cash to buy a business where it's 206 million of assets. So you're paying 73 to get 206. Yeah. Which kind of, you'd want to get a peak price earnings of 8 times, as far as I'm concerned. That's what I would want as a minimum, which, on a 73 million, that would be 9 million. So the forecast earnings gets me to 12.7. So it's essentially 38% above my minimum, is what I'm saying. So when I look at it from a balance sheet point of view, I'm pretty happy with that as well. The third pillar, I mean, and this is kind of where it starts to get even more exciting, where you say, well, okay, I've bought an asset where I've got 260 million tons of waste ore, and I've sold 10 million tons of it for 6.75. And then I've sold, now Jubilee don't specify what non-core assets, but they say we've sold non-core assets worth 11.25. Maybe those are Chingola, large waste, or maybe they're not. I mean, you can sort of argue it both ways, but if they are Chingola related, well, the sale of assets has already covered the cost of Chingola, so it's in the price for free. They're talking about developing it with a partner's involvement, and again, I think the idea here is that they're planning to create modules where they'll produce 5% concentrate and then sell the 5% concentrate to, like, a refinery or a copper processor of some kind, maybe to guys that make 25% copper concentrate. But the idea is that the selling price of 5% ore is obviously going to be far in excess of what you'd pay for, like, just a tolling agreement for your 1% ore. 5% ore is more than 5 times the price of 1% ore because it's simpler to process. So that's kind of the idea. And this large waste, because of its complexity, they need to pre-process it to kind of make it available for sale to whoever within Zambia. But obviously, there's plenty of other copper operations in Zambia. So this third pillar, I think it's more difficult to understand what the profitability of that's going to look like at this stage. And what sort of selling price could you sell 5% ore for? But I kind of look at that and think, well, it's got to be worth quite a bit. I mean, they managed to sell 10 million of it for 6.75. I mean, even if you only use that as the valuation basis, I mean, you're still looking at like nearly $1 a ton. And if you've got 250 million tons of the stuff, I mean, that's 225 million tons worth of stuff, if that's the going rate, if that's the best you can get, 90 cents a ton. And bear in mind that you paid 18 for it and you've received 18 from it or other stuff. So, you're selling something for 225 million that's going to cost, that it's in your books for free. So again, there's an upside there on the third pillar. If nothing else, then potentially that's kind of potentially the upside. What's less clear is what are the costs to produce the 5%. Obviously there are going to be some. Obviously that 225 might be minus, so maybe it's only 100. But I'd remind you, like, the whole company, the whole of Jubilee, you can buy for 100 or 108 technically. So even if there's a 50% processing cost to that 225 and they only see 112 of it, like the large waste project itself pays for the share, and then everything else on top. So, none of that's in my profit model. There's keen interest for the large waste and various parties that want to work with Jubilee. That there's news, news coming in the relatively short term. So yeah, when you add all of this together, I mean, you're getting the 90 million proceeds, you're getting the, whatever you think Tjate's worth. It's on the books at 41. Chingola, if you sort of say, well, 90 cents, 240 million, if that's how much is left. You've then got the ongoing pillar 1, pillar 2, Rowan Sable, whatever valuation you put on that, 8 times would be, and it's 12 million, then it's the market price anyway. But even excluding that, I mean, you've got assets potentially worth 350-ish million. And I suppose the market caps that, and that's kind of where I'm sort of getting this 257 excess from, where it's like, well, even if you were to just buy this business, break it up, dispose of it, sell it off to various different people, like it, you could imagine it being sort of worth a lot more than its share price, and maybe there's a third way where some of it will get sold off and some of it will remain as an ongoing operation. These are all options on the table, I guess you could say. And then you've also got we haven't talked about Project G. We haven't talked about Mufalira. There's other assets and other and I sort of list them here that there's other things going on where there's value to those as well. I mean, Project G, 3%, 3% grade. That's very good. And Mufalira, I think I don't have that listed, but again, there's an upside there as well. So anyway, just to kind of conclude, I suppose, even though this comes with risk, it's kind of really just execution risk more than anything, because they've got the assets, they've got the production, they just need to expand the production, they need to conclude the sale of the South African business, they need to just execute. That's all they need to do. And I suppose, having executed successfully, that they then develop. I'd really like to see buybacks. I think there's a lot of people that would. The buybacks would be incredibly value increasing. Will that happen in 2026? Well, the 85 million's got to go somewhere. It's obviously 85 million is not going to be cash in hand in 2026, but there'll be a flow of funds, and those funds have got to go into something. So we'll either see expansion or we'll see buybacks, or maybe a combination of both. But yeah, look, I suppose that's my rationale and why I've picked this as one of the picks for 26. So I sort of make a funny little point here about sort of my prior article was something themed around Arnhem and so on. So I sort of make the point again that, yes, there are people running away from this idea and escaping and, sort of metaphorically swimming back across the Arnhem River. Whereas like all you've got to do is wait for the armored columns of copper production to come along. Because once those arrive, once those production numbers are in the, once we see an RNS that says, right, yeah, Sable's back open and we've produced this many thousand, once that happens, then I think people's perspective on this will completely change. That combined with, copper's now at 11. If it goes to 12, if it goes to 13, at some point, somebody's going to say, well, hang on a minute. Like, when you run a little model like I've run, the profit will ratchet up, and that'll be another reason for the re-rate, and also buybacks will be another reason. I think once and if they start actually doing shareholder returns of some description, that will be a change in perspective. That the focus has always been on growth, and rightly so. That they've had plans and ambitions, and there's a keenness to catch the Zambian expansion. I mean, the country Zambia, they're looking to expand their annual production as a country from, I think, 1 million tons of copper to 3 million tons of copper by 2030 something. So Jubilee is playing into a very strong macro where there's a supportive government and a government who wants this to succeed. So that's another positive. I mean, it's not like drilling for oil in the North Sea where you're kind of persona non grata. You're persona grata in this scenario, and the Zambian government see copper as a key strategic source of growth. And the Zambian economy itself is growing fast, is the final thing to say. I mean, it's, whilst we should talk about risk and political risk. I mean, if we go and look at Zambia, which is at the bottom of this list somewhere, there we go. Yeah, I mean, GDP is growing at 5.2% a year. Inflation, okay, inflation's not so good, 12%, but we can sort of see, it's yeah, I suppose it's down from 16, and obviously they've been there we go. Sort of see it's sort of heading downwards, and of course, a lot of these countries have suffered through tariffs and other things. So yeah, I could see pinning your mast to Zambia as a country, as a place to do business. It's obviously not the most business friendly in the world. You can see here tax rates are 30 and so on. But at the same time, as I say, it's a strategic priority for the government. So there's that positive as well. So that concludes, I think, pretty much concludes what I was going to cover. Uh, as I say, I mean, it's the mathematics of it, just extrapolating what they're already doing that I've done here to sort of say, well, this looks good value to me, and that the share is fundamentally cheap, whether you look at it from a operational and a profit and loss point of view, or you look at it from a balance sheet and assets point of view. It's kind of demonstrated to us that it's got more than what it's priced at, essentially, and because it's got both, there's kind of a couple of ways of looking at it, and I kind of like these shares where you can sort of say, well, what's the downside if it all goes horribly wrong? I mean, could they sell parts of it off? I mean, yes, I think the answer is yes. There, they've already sold parts of it off, and they've got good money for the parts they've sold. With the Zambian government making copper a priority. I mean, they put a copper refinery up for sale, and they put a copper concentrate processing plant up for sale. Could they sell Rowan? Could they sell Sable? I'd say the answer is yes, yes to both of those. They develop and they've got Malefe, Mufele even. I can't get used to not calling it Munkoyo, but anyway, if could they find a buyer for that mine that is mining and producing, where they've been able to stockpile 2 million tons of ore? Yes, is the likely answer there as well. So, we're not talking about stranded assets in some far-flung place where there's a risk of, well, I mean, there's always risk and there's always a chance, but on a balance of probabilities, I mean, there's a chance of it happening in the UK, for goodness sake. I mean, if hang on to your hat for the budget in a few weeks' time. So yeah, there's no absolutes in this world, unfortunately. But hopefully that gives you a little bit of a picture on where I'm sort of seeing this idea. And in some ways, it's not sort of anything other than what I've already covered in prior articles. But hopefully, by bringing it all together into this is why I believe it should be part of the picks. That sort of gives you a little bit of a flavour. I'll be publishing the article in the next couple of days, and thank you for watching. Much appreciated, and if you can do the likes and the subscribes, that's always appreciated. And thanks for watching. Yep, thank you whoever just because see somebody just liked in response to that, so appreciate that. Thank you very much. Oh, two people. There we go. We're rolling now. We're rolling now. Very good. Thank you again for watching. Cheerio for now. Cheerio.